Hey everyone, Adam Bergman here, tax attorney, founder of IRA Financial. And today I'm going to spend some time talking about Roth conversion solutions or opportunities for 2021. And this podcast slash video will be essentially discussing the proposed tax bill from the House Ways and Means Committee and talking about some of the provisions that could impact your Roth IRA or Roth 401k dramatically. So what I want to start to do is basically outline some of these tax proposals, specifically the ones dealing with the Roth IRA, Roth 401k. And at that point, we can take some questions and have some fun discussing some of your thoughts and opinions. So let me start out by giving you all some background. And it's great seeing all of you. Thanks for all your support. It's a trying time in our industry. I always felt that the retirement system was bipartisan. I always had confidence that Democrats, Republicans would do the right thing when it comes to people's IRAs and 401ks. And I always had people ask me, hey, do you think they'll change the rules? Do you think my Roth IRA will be in jeopardy? I've done everything they've asked me to do. I'm saving, I'm making contributions on a consistent basis. Is this going to be safe? And I've always said, yeah, people don't want to mess with your retirement account. It works since 1974 when ERISA was created. It's the one system that works. We all know, healthcare is a mess, and we got immigration issues and all kinds of other policy issues, but the retirement system actually works. It's really the only system that, irrespective of your net worth, your skin color, your religion, it works. Why? Because it's based off principles of mathematics, principles of deferral, principles of compounding interest. And it's a simple mathematical equation. You put money away, do it consistently, make some good investments, and just wait. And time value of money, your money will grow. And based off compounded returns every 8 years, your money will double. So it's just been a system that works. And we saw that in 2019 when the Secure Act was passed and almost unanimously by both Democrats and Republicans on the Ways and Means Committee. So now we find ourselves in a very precarious position where we have this tax bill that was proposed back on September 13th, which feels like a million years ago. I've spoken to more members of Congress and senators than I ever thought I would ever speak to in my entire life. And now I know why I didn't want to live in Washington, D.C. or deal with politics, because it's really tiring. However, we are under attack. Not just self-directed IRAs, all retirement accounts are under attack. And unfortunately, we got some hard work to do in order to educate our members of Congress and our senators that the retirement system should not be touched, and it works as is, and there is not abuse. Okay, and I'll explain why. So let's talk about the 4 or so provisions that deal with Roth IRAs and Roth 401ks, and then I'll talk about some of the conversion strategies that we can all employ in 2021 in light of this tax bill. So the first one's the cap, and as proposed, there'll be a $10 million cap on IRAs and 401ks in the aggregate. So you can have 5 million in an IRA, 8 million in a 401k. You are capped at 10 million. And here's the only: if your income level is above 400,000 if you're single, or 450 if you're married, filed jointly. The idea is, hey, most people with big IRAs are pretty rich, so they're going to have income over the 450 threshold, so it's not really an issue. And this way we can say, hey, we're not going after everyone's IRA. We're only going after the rich people's IRA that have high income. So there is then a mechanism, if you have more than the 10 million, about taking those distributions down to the 10 million. If you have above 20 million, there's rules. And if you have under the 20 but above 10, you basically have 2 years to get it down to 10 million. And then there's still some debate as to whether those actual distributions will be taxable. What happens if you're under 59.5 and you have a Roth IRA and you had no intention of ever taking a distribution? What do? Are you forced to pay tax? Is there going to be penalty? It's unknown yet. there's some discussion. It believes we believe at least they're probably going to try to tax, no penalty, but tax people with Roth IRAs over 10 million under 59.5. Why? Because Mr. Peter Thiel is under 59.5, and with 4 or 5 billion in a Roth IRA, this is their chance to go after his money. And Peter Thiel, fortunately, is one person that does not have many friends on the Democratic side of the aisle. And a lot of these provisions are essentially targeted at him. Unfortunately, it's one person, right? He is a rich guy, but it's one person out of 350 million people. And here's some numbers for context. There's less than 500 people in the whole United States that has over 25 million in an IRA. There's less than 30,000 people in the whole United States that have more than 5 million in an IRA. And that's, again, time value of money, right? If you started saving in your 40s and put away $10,000, $12,000, $15,000 in a 401k, and now you're in your 70s and you've done some decent investments, you bought Tesla or Apple or Google or whatever it was or is, you likely have more than $5 million in your IRA. So when I give the example, if you put away $5,500 from 25 to 72, 10% rate of return, you'll have over 5 million in an IRA. So it's not just the uber rich, right? And that's the unfortunate thing. Now, as an industry, we're essentially going to concede the cap, right? It doesn't impact a lot of people. If only 500 people have more than 25 million, we can assume only a couple thousand have more than 10 million. It's not our industry. I'm in disagreement with the cap from a policy standpoint. I don't think government should cap people's wealth. I don't think arbitrarily you should pick a number. The Roth IRA will ultimately be subject to a state tax anyways, so the government will get their money. But unfortunately, that's kind of the world we live in right now, and it's hard to have sympathy for rich people. So that's kind of where we fall. However, there's some other provisions that haven't got a lot of notice that I want to focus in on because it will impact your Roth IRAs or Roth 401ks. And here it is. 138311 says this. If you make more than $400,000 single or $450,000 if you're married, file jointly, you will not be able to do conversions anymore. No more Roth conversions. Now, starting in 2010, the government got rid of the income thresholds for conversions. Why? Because they like conversions. Government, Congress, Democrats, Republicans over the last 10 plus years realized that conversions do what? They bring in tax revenue, right? Every member of Congress or Senate wants more tax revenues. Okay, so both Democrats and Republicans, again, this was passed during in 2010 under President Obama, but it was not reclassified under President Trump. Conversions bring in money, and they're okay if people want to convert from pre-tax to Roth and pay tax. We're good with it, no problems. However, 138311 will say no. If you make more than 400 or 450, tough luck, no conversions. We don't care how much your IRA is. You can have 50 in your IRA or 300 in your IRA or 45 million. Tough luck, no conversions. Fair? Again, the idea is, hey, this is kind of the appetite and this is the intent. And this is really the thought process behind a lot of this tax retirement legislation is we're seeing the concept that, hey, rich people are abusing the system. These rich people, these uber wealthy people, even though we know there's not that many of them because only 500 or so have over 25 million and less than 30,000 out of 350 million Americans have over 5 million. In any event, somehow they're gaming the system. So we need to stop these uber rich people, who I guess make more than $450,000 from gaming the system and being able to convert, which they believe unappreciated or low valued assets like stock into a Roth. If it was so easy, there would be a lot more than 500 people with big IRAs, right? If it was so easy to just dump founder stock into a Roth, we would all do it. The problem is 90% of all startups fail within the first 5 years. So it's not as easy as Peter Thiel, at least Democrats, made it out to seem. Peter Thiel, again, not very sympathetic, but he did invest in 3 super successful Public companies, PayPal, Facebook, Palantir, as an early investor. Not so easy to be done. Kudos to him. But unfortunately, that's not what these bills are targeting. These bills are targeting you and me, regular Americans that may this year make only 100 or 150, but maybe next year, because we sell an asset, whether it's a house, whether it's a real estate investment, whether it's our consulting business, and we get over that 450 threshold, tough luck. The conversion option is now thrown out the window. Again, this is an annual test, right? You can have 200 this year, 600 next year, 400 next year, the year after. So it's kind of arbitrary, but they're basically saying we don't want the rich, who now they believe make more than 450, to do conversions. We think they're abusive. The problem is, who pays more tax when conversions are done? People that pay 10% tax or people that pay 40% tax? So not only is this not going to raise revenue, so I'll give you some numbers here because I think it's important to see what these provisions will actually raise in revenue, right? Before we talk about what the intent is. Because again, just to take a back step here, the intent of all of this is to raise revenue to pay for infrastructure, right? To pay for social programs. Whether you agree with them or not, that's the whole part of budget reconciliation. The Democrats, President Biden wants to show that all these programs are going to be paid for. They're going to cost zero, as the president said. So what is this going to raise? According to the document released by the Ways and Means Committee, the tax treatment of rollovers Roth IRA accounts in the aggregate over 10 years will raise $749 million over 10 years. And in fact, they have it as a zero revenue raiser until the last year where it raises $609 million and the year before 140. So they're basically saying for the first 8 years, this provision will raise zero money. But anyways, we think it's important. And the last 2 years, somehow we think it's going to raise money. Don't know how. But basically, to me, it's a revenue loser, right? If you stop people from doing conversions, they won't do them. They just won't do them. So it's not going to generate revenue. It's going to lose revenue because people that do conversions pay tax. People that make over a 450 will pay more tax than the people that make 100 or 50 or 75,000. That's just the way the system works. That's how our tax system works. The people that make more pay more tax. That's a progressive system. So getting rid of this conversion option is pretty much pointless. It's actually going to be a revenue loser if you think about it, and it doesn't really have much sense. Right? It's certainly irrational. But that's kind of where we stand right now. So 138311 will basically prohibit conversions in IRAs or 401ks from pre-tax to Roth if you make more than the 4 or 450. That's kind of where we're at. So it's proposed, doesn't mean it's going to be part of a final bill. There's a good chance. I haven't heard a lot of issues with these provisions. The two provisions, obviously, I've been focusing on and my industry is the 138312, which talks about prohibiting accredited investors from investing, or basically anyone, I should say, from investing in accredited investor investments in their IRA. That includes private placements, private equity, hedge funds, venture capital funds, and the like. So that's obviously gotten a lot of attention, not just from our industry, but from JP Morgan and the Morgan Stanleys, who have their clients also invest in those types of funds with their IRA. And then 138314, which prohibits an IRA or from investing in any entity the IRA owner is an officer of or owns more than 10% of. However, these Roth provisions, the conversion one, and the two I'm going to chat about right now, is really not received much attention. And it's too bad because this conversion threshold can impact all of us, right? Even if you're not making 450 today, you may make it in 3 years. You may make it in 6 years. And what this provision is doing is it's basically stopping you from having that option. Now, again, back in 2010, Congress was very receptive to conversions. In fact, they encouraged Americans to make conversions by saying, hey, if you elect to do a conversion, you actually don't have to pay tax this year. You can spread it over 2 years. So they encouraged us to do it. Why? It raises revenue. Okay. And generally people with more money pay more tax, which generates more tax revenue. So this provision simply is, basically inconsistent with that, and kind of irrational. So there you go. Well, it gets even worse. So 138311, if you scroll down that provision, has the next paragraph says this: irrespective of your income, you are not able to do a backdoor Roth IRA anymore. So what's a backdoor Roth IRA? A backdoor Roth IRA says, hey, if you make more currently of 140,000 and you're single, or 208,000 and you're married, filed jointly, you're not able to do a Roth contribution. But through this backdoor mechanism, which became available after 2010, when, again, 2010 removed the income thresholds for conversions. Now, starting in 2010 and continuing as of today, in 2021, irrespective of income, you can do backdoor Roth contributions. So if you made 500 or 400 or 300, you made more above the Roth 208 if you're married, filed jointly. However, this backdoor Roth mechanism allowed you to go backdoor, do an after-tax contribution, and then convert to Roth. Now, all that would be tax-free because you would go after-tax to Roth, and after-tax contributions are after-tax. They're not pre-tax. So again, we're not talking about revenue raising. This is after-tax money, right? This is not pre-tax money. So what is this going to do? It's going to stop all of us from doing backdoors if you make more than the 208, married, filed jointly. And what it's going to do, it's going to somehow encourage us to do more pre-tax contributions. So even if we can't do a pre-tax IRA because of the income thresholds, if you have access to a 401k, you may not be able to make pre-tax IRA contributions. What that's going to do is say, hey, I better make higher pre-tax 401k contributions, or maybe set up my own solo 401k so I can do more pre-tax contributions. Now, what does pre-tax contributions do to the government? It reduces their tax base. Why? Because you pay less tax because you are able to get a deduction for your pre-tax contributions to an IRA or 401k. So not only is this going to have essentially an irrelevant impact on taxation because it's after tax, it's not going to have any impact on stopping rich people like Peter Thiel, who couldn't care less about $6,000 or $7,000 in an IRA. It's going to hurt you and me. It's going to hurt everyday Americans that want to put a little bit more in a Roth. Why? Because we want to save more. We've been told for the last 40 years that, hey, guys, don't count on Social Security. May not be there when you're older. Save. Put away money. Here's an extra incentive. When Roth was created in 1997, why didn't they put these rules in? Oh, they didn't perceive abuse then? There's no abuse. If there was so much abuse, there would be more than 30,000 Americans with more than $5 million in an IRA, not just a Roth IRA, any IRA. So there's probably 2,000 Americans with let's say 15,000 Americans with more than 5 million in a Roth. Okay. The 28,000 number for 5 million or above includes all IRAs, SEP, Simples, pre-tax, Roth. If you just exclude Roth, probably looking at half that, right? So 15,000 people out of 350 million, and we want to blow the whole system up because we think there's abuse. We think that people are going to be able to turn 6,000 into 5 billion. It doesn't happen. If it happened so often, there'd be more than one Peter Thiel. So the government's making policy based off one person. Crazy. But that's what we're dealing with. So this is going to impact all of us that wanted to do backdoor to put a little bit more in, right? You don't have to max out at 6,000 or 7,000. You can put $2,000 in, or 1,500 in, or $3,000. That's gone. Again, not going to raise revenue. It's going to actually depress tax revenue from a government standpoint because force more people to do pre-tax contributions. So it's essentially absurd. It's inconsistent with what we've been told for the last 40 years, and it's irrational. Okay, and it has, I think, significant negative connotations for all of us. Why? It incentivizes us to save through the retirement system. By going through this process, we're seeing that, hey, the government is basically changing the rules on us, right? I use the baseball analogy. I use football, I use basketball. Let's do baseball. You're in the seventh inning. You're winning 4-0, and the ump say, you know what? Sorry, losing side. You're down 4-0. It's a mercy rule at 4 runs, game over. It's like, what do you mean? I have 2 more innings to catch up. No, game over. Sorry. So you can't do that, right? It's not right. And not grandfathering any of these IRAs in either, for the cap at least, unfair. We see that for the accredited investor, there is going to be basically a 2-year window to unwind these accredited investor investments, which is ridiculous because these are liquid investments. Go unwind a private equity investment with a 7-year lockup. Crazy. So there hasn't been enough thought in these provisions, but specifically the Roth stuff, because I would have expected to see a lot more op-eds, editorials about the Roth provisions, because again, this is not raising any money. It's actually hurting fiscally the government, and it's stopping you and me from just putting a little bit more in a Roth IRA, right? We're not able to put $1 million in. We're talking about $6 or $7 grand. Like, is it really worth it? What the heck is going on? So that's the next Roth provision that will go bye-bye. And then the last one, which was a really, really awesome opportunity for the self-employed. So the mega backdoor Roth 401k, since 2014-54 was published, allowed small business owners who set up solo Ks from making after-tax contributions and then converting them in the plan to Roth, or pushing them to a Roth IRA and converting them there. Now, it would be after-tax to Roth, so there'd be no tax on that conversion. So 138311 wants to eliminate the mega backdoor Roth, irrespective of income thresholds, right? Same with the backdoor Roth IRA. Irrespective of income thresholds, you cannot do it. So if you make the $209,000, even if you're $1 above the Roth threshold, you'll lose the option. The mega backdoor, even if it's in your plan, you can't do it. So who are they targeting here? Well, essentially, solo 401k plans are really the only type of pension plan, retirement plan that is able to offer and have their participants engage in mega backdoor Roths. Why? Because there's something called ERISA testing. Okay, under ERISA testing, a plan needs to satisfy certain ERISA requirements in order to be eligible and approved for these contributions. There's top-heavy testing, making sure the high-income earners aren't putting away too much in comparison to the rank file employees. There's also something called ADP, which is a deferral percentage test, and ACP, which is a contribution percentage test. Well, these after-tax to Roth contributions will fail the ACP test if you work at a business that has multiple employees. Assuming more than 50 or 60% are not doing this mega backdoor, which is never the case, even if the plan offers it, and a recent Wall Street Journal article mentioned that about 20% of Fidelity 401k plans offer these options. Now, even if they offer it, you're probably not going to be able to do it because it's going to fail the ACP test. So that's one thing the article didn't mention. Yeah, they can offer it in the plan document, but the participants can't take advantage of it because of the ACP test. But solo 401k plans are not subject to the ACP test. So that gives solo 401k participants the ability to do this mega backdoor Roth solution, which allows you to go dollar for dollar, $58,000 or $64,500 if you're over 50, which is a great opportunity for small business owners or self-employed to put away a lot of money into a Roth. Now, who's setting up solo Ks? Are the uber wealthy setting up 401ks solos? Is Jeff Bezos, Peter Thiel, Warren Buffett, Elon Musk? No, right? They work for Tesla or Amazon or Google or Facebook. They don't have a self-employment business where they're able to put away 50 grand, right? It's bonkers. This is absurd. They are targeting you and me, small business owners that could make under 400. There's no threshold here, right? You just can't do the mega backdoor. Even if you make 50 grand, even if you make 75 grand, even if you make 100, you cannot do this mega backdoor. So what are they trying to do here? It's not attacking Bezos, Buffett, Zuckerberg, Thiel. What's going on? It's attacking you and me, regular Americans that maybe want to put away $20,000 or $30,000 in a Roth. They're saying, no, can't do it. We think it's abusive. But why? Notice 2014-54 allowed it. It's in 20% of major 401k plans. Why are we disallowing it? What are we trying to do? Is it going to raise revenue? No, it's after tax to Roth. What it's going to do is actually decrease tax revenue dramatically. Why? Because guess what people are going to do? They're going to say, hey, I can't do Roths. So what am I going to do in my solo K? Bingo, pre-tax. And when I put 19.5 and maybe 25% of my 100K or 43,000 or so in a pre-tax 401k contribution, what's that's going to do to my tax base? It's going to reduce it. That means less income tax. So the Ways and Means Committee is basically saying, we think there's abuse. The uber rich are somehow abusing these solo Ks, even though they can't get access to them because they run huge companies and they don't really care about 40 grand in a retirement account. They're worth 100, 200, $1 billion. They don't care about 20,000, 40,000 in an after tax to Roth. It's impacting us. I'm not sure they understand this. I'm not sure. I've spoken to 15 members of Congress, both sides, various senators and their staff. They, first of all, had no idea this was in there. Number two, they don't even know what a backdoor is. Number three, they're clueless as to why this is in there. And they always ask, well, it must raise a lot of money. I'm like, no, it raises zip. They claim it raises 700 million over 10 years, where the bulk of it in the last 2 years. But I think that's probably some magician math, because it's going to be hard to see how that raises revenue when it's after tax to Roth and there's no tax to begin with. You're actually going to lose revenue because you're going to force people into making pre-tax. So those are the big provisions. It's the cap. It's the no on the backdoor, no on mega backdoor Roth 401k, and then limits on conversions. So what can we do in 2021? Well, we got a couple months to do whatever we can do to push money into a Roth. These provisions will not apply until next year if they pass. Okay, there is an if. I think there's a good chance that these get in. I do not think the accredited investor and the 10% officer one will get in because of the negative impact it's going to have on millions of small businesses' ability to raise capital in the United States. But I don't think enough people understand and are focused on these Roth provisions. So I am a little bit concerned about the fact that they could get in the plan. So as someone who's a Roth lover, I wrote a book, In God We Trust and Roth We Prosper. Like, I've been, all my money's in Roth. It's kind of disturbing to say the least, but I haven't been able to do a solo K because I run IRA Financial. I'm not self-employed, but for the thousands of people that are IRA Financial clients that have solo Ks, and for the thousands of people out there that are thinking about a solo K, this could be your last chance to dump 58 or 64,500 into a Roth 401k. Okay, this could be your last chance, because next year, if this provision is part of a final bill, you're not going to be able to do it irrespective of income. Even if your income's $1, they're not going to allow an after-tax to be converted to Roth. You can convert pre-tax to Roth, but not after-tax to Roth. So we got a couple months to do this. So if you have a side business, now who is eligible for a solo K? Anyone that has some self-employment income. You can be the CEO of a major software company with 5,000 employees. If you have some side income, meaning you do some consulting on the side, you do some marketing on the side, I don't know, you're a model, you sell stuff you sell Nikes or Yeezys on eBay, you sell photos on Etsy, or designer t-shirts on Etsy, or you sell toilet paper on Amazon, like whatever it is, doesn't matter. If you're self-employed, you have the ability to do a solo K, and you also have the ability to potentially do the mega backdoor, which will allow you to go dollar for dollar. So let's say you make $40,000 self-employed, right? You sell shoes on eBay, or baseball cards on eBay, and you make $40,000 net on a Schedule C. You can still go potentially up to about 30-something thousand dollar for dollar. Why? There's 15.3% Social Security FICA that you got to reduce to $40,000 base in this example, and then whatever's left, you can go dollar for dollar into an after-tax 401k, convert to Roth. So it's a really cool opportunity to dump a lot of money into a Roth, although we only got a couple months, to act on this. So if you are out there and have a 401k, consider the mega backdoor. If you're self-employed, consider setting up the solo K today. You can do it today. Takes a few days to set up, and then you can do the mega backdoor Roth 401k before year end. So these provisions are supposed to kick in January 1, so you have until 12/31 to do this. So same with conversions. We have until the end of the year to do conversion. So if you have assets that you think are going to appreciate in value, if you think you're going to have a low income this year because of COVID or other financial constraints, then this is a good opportunity to potentially do a conversion if you make more than the 4 or 450. If you make under the 450 and you think you're going to be under that threshold for years to come, then you have time. You don't have to do conversions today, but it's something to think about. I.e. cryptos are down, right? Cryptos are off their high of 65. They're hovering around in the low 40s. If you're bullish on cryptos like Bitcoin, you may want to do an in-kind conversion. If you make more than the 450, this is your last chance. If you make less, you got time until you make 450 down the road. And that's the arbitrary nature of that income threshold, right? You can have 200 this year, but next year you sell part of your business or you have a windfall from something and you're over that 450, suddenly your conversion option is removed. So arbitrary, it doesn't make sense. It's going to hurt tax revenue for the government, but it's perceived abuse, right? These uber rich people are somehow, at the country club with servants around them, sipping champagne or eating caviar, having their nails done and talking about how to, cheat the tax code. Doesn't happen. I've been doing this 11 years. I got almost 30,000 clients. Less than 1% of our clients have over $1 million. Our average account's $125,000. We serve you. We serve Americans, right? We're not all uber rich. This self-directed IRAs, Roth conversions, mega backdoor Roths, these are done by Americans, regular Americans, right? Who work hard every day, that want to provide for their families, that want to leave a legacy to their children. We're not uber rich. We're not flowing around in private jets and driving on our Ferraris, and that's not us, right? These provisions are targeting all of us, and unfortunately, they're being used to pay for these programs. And again, it's not about the programs, whether you agree with them or not. That's irrelevant. The fact is they're targeting our retirement accounts that we worked so hard to save, okay? And who we believed in as a system that works. And we've told this is what you need to do. And they're taking that away from us. And in some cases, all of us, irrespective of account values, like the backdoor Roth IRA, like the mega backdoor 401k, like $6 or $7 grand in a mega backdoor IRA. Is that egregious? Like, is that going to, break the system? No. So it's unfortunate. Again, if you're as upset with this as me, reach out to your member of Congress, reach out to your senators. 138311, that's the bill name. Also mention 138312, 138314. They're basically trying to take our retirement accounts to pay for these programs. It's going to hurt millions of small businesses, whether the business owners from contributing to Roth 401ks, doing conversions, or business owners' ability to raise money through private placements like Reg A's, Reg D's. So really sad stuff. But let's get to the questions, okay? I appreciate you guys spending some time in the middle of the day with me. This is obviously taped, so you can bounce and then watch it at a different time. But let me go through some of these questions. I'm going to focus on Roth stuff. I got some crypto questions, but you can hit me up with those at a different time. I promise I'll get to them. Yes, you can convert a SEP to a Roth today. If you make more than 450 in 2022, you will not be able to. I'm looking forward to this event. Thank you. I really appreciate it. I love these. I'm actually going to try to do these every Wednesday if I can get my production team to work with me on this. Kind of pick random topics and just chat with you, even if they're 15, 20 minutes, if news is light during the week. Just a way to kind of talk to all of you and keep things going so I can answer your questions, and make sure that you have all the necessary information so you can be the best investor you can be with your retirement funds. Because I do believe it. Smart people self-direct. It's true. Okay. And I still believe that. Does the income limit apply to mega backdoor Roth 401k? No, there's no income limit. We're all done, even if you make $1. Can you still do a mega backdoor 401k if you're below the income threshold? Not in 2022. No income thresholds for backdoor Roth IRAs or megas. Zip. You can make $1, you're still done. I'm 64 and well under the 400k salary. Should I bother to transfer 401k money into a Roth and pay the taxes now? That's your call. Again, if there's assets, in-kind assets like Bitcoin or stock that's significantly depreciated that you think will bounce back, then you may want to consider it. Otherwise, I'm not sure you need to. It's your call. Mike, I currently have my IRA invested in a credit investor fund. If the law passed, can I move money out of the fund and move to Fidelity? Yeah, I mean, as long as the fund will let you do that, sure. You'll have 2 years to do it. Again, I significantly feel strongly that those provisions will not be part of the bill, but you will have 2 years, Mike, to move it out. And if it does pass, it's going to be a sad day, not just for the retirement system, but for American small businesses who rely on $12 trillion of IRA. We've estimated our industry our clients have funded over $250 billion into investment funds and private placements that fund American businesses. That will be gone. So we're trying to educate members of Congress, senators about the negative impact of these provisions. This will not stop the Peter Thiels. We have the cap, right? If you're really trying to stop these uber rich people from abusing the retirement system, even though it's not happening today, you have the cap. We're okay with that 10 million cap. We're giving it to you. You got it. So is it really necessary to go after me and you, the regular folks who just want to invest in the neighborhood pizzeria or the startup down the street? Is it really necessary to limit our investment options for those types of investments? I don't think so. And I hope, I know you guys don't, and I hope members of Congress and senators from both sides wake up and say, yeah, this is wrong. We don't need it. So that's my hope. If it passes, so will all of with solo. So the one thing, the provisions of 138312, 138314 only apply to IRA. They do not apply to 401ks and pension plans. Why? Because members of Congress and senators know that these investments do well, and they want to have pension plans like CalPERS and all these important pension plans from around the country invest in these alternative assets. They just don't want you to do them. So they're okay if the big pension plans do it or big 401ks, because they understand the value of those investments. They don't trust us. They don't think we're smart enough. They think we're going to get swindled or we're going to abuse the system. So it's an attack on us individually. They're letting big pension plans and 401ks do it because they trust them, or they understand more likely that these are good investments that should be part of a investment portfolio like CalPERS, where the money is needed to pay for pension benefits for millions and millions of Americans or California residents, but they don't want us to do it. Not good enough for us. We're too dumb, or we're going to abuse it, but good enough for them. So that's what hurts. So you will be able to do it in a 401k. Is the elimination of the backdoors for 2022. I've heard that the newly proposed legislation will also eliminate the checkbook IRAs. Is that your understanding? No. What will happen is the way the elimination is now is it says you can't be an officer of an entity your IRA owns. So what will happen is you'll have a spouse or will serve as your manager, IRA Financial, and you'll still have control over the checkbook and do whatever you want. So this provision was not specifically designed to attack checkbook. It was designed to stop Peter Thiels, designed to stop people from putting founder stock where they own more than 10% of, or they were an officer of, into a Roth, because that's where they perceive the abuses. We know, easier said than done. It's not happening. Why? 90% of all startups fail in 5 years. If it was so easy, there would be more than 500 people with more than 25 million, assuming and taking into account all the valuation increases that have occurred over the last 5 or so years. There would have been 50,000 people with more than 25 million because they would have been able to dump all their shares of their startup into the Roth. It's not happening. Okay. So the checkbook IRA is not a target. Government understands the law, the ability to get limited liability protection, the importance of buying real estate in an LLC. That's not what they're targeting. They're targeting founder stocks and Peter Thiel. So the checkbook control will live on. It will survive. It will thrive because of the easy workaround. The Fed government wants to make an example out of Peter Thiel. Yeah, they do. Not all. I think the Democrats, for whatever, and I don't want to get into politics, but he was the biggest, supporter of Trump, and he just raised, I think, $10 million for a congressional election, or at least a primary election in Ohio. So yeah, the Dems don't like him. He funds Republican, congressional candidates. So it's definitely political. It's always political. And again, I'm not going to the political theater. That's not my game. But he's only one guy, right? Rich guy. I don't really care. I don't know him. I don't care for him. But to change the whole system for one dude seems harsh. Doesn't seem right. Does the 1099 for the mega backdoor Roth need to be filed by 12/31? No, just the contribution needs to be done. You can file it in January. Does the income test on Roth conversions start in 31 or earlier? No, it starts next year technically. That's what's going to be the threshold. So it's a moving number, right? No one makes the same amount of money each year. So and that's why I'm so against that provision and the way it's drafted, because people, you want to give incentive for people to make more money, and let's say you do make more money next year, you lose some opportunities. Crazy, especially conversions that generate revenue for the government, right? It's always been seen as a very positive, transaction for the government, both sides, because it raises revenue. That's why Obama incentivized people in 2010 when Treasury was in need of money due to the financial crisis. They said, hey, it's a great way to raise revenue. Let's encourage conversions and have people paid over 2 years. And now they're saying, you know what? We'll let people do it. The uber rich, even though 400K is a lot of money, but it's not uber rich. We're going to stop them from doing it. But unfortunately, they're the ones that pay the most tax, right? I mentioned this number in my podcast. I'll just kind of drop it right now. It's kind of interesting, and it kind of goes against what they're trying to do. So according to the Tax Foundation, in 2018, the top 1% of American taxpayers paid more than 40% of all federal income tax. That's up from 33% 2 decades ago. The bottom 50% paid less than 3%. Okay, so what's going to happen is if they stop the upper income people from doing conversions, their tax base will shrink, because less people will do it, and the people that do it pay less tax anyway. So doesn't really make a lot of sense. Again, the abuse is not there. If the abuse was there, you would have more than 500 people with $25 million in a retirement account. It's just the way it is. You'd have more than 30,000 people out of 350 million people with 5 million or more in an IRA. It's not happening. We see it in our industry. It's not going on. Okay. The super rich that have all that money, they're buying stocks. They're not abusing it in startups, right? Most of those people, if they are doing alternative assets, it's like you and me. It's diversification. Maybe they'll take 10, 15, 20% of their money and invest in a hedge fund or a private equity fund or a venture capital fund, or maybe do a private placement. It's not like they're dumping all their money into startups, right? The whole thing is crazy. They're putting their money into equities. I spoke to someone at JP Morgan who's one of the large wealth managers there. And he said, Adam, we're against this. And I said, hey, what type of clients are you seeing using their IRA to invest in private equity or hedge funds? Are they the uber rich? Like, who's doing this? He's like, no, the average IRA that's investing in these private equities are 250 grand, right? We're not talking about the uber wealthy. We're talking about Americans that have saved for the last 10, 15, 20 years, that have a couple $100 grand in their IRA, and they want to invest in a private equity fund. They want to invest in a credit investor private placement. Why? They have a lot of their money, if their personal wealth, tied into mutual funds and ETFs and equities, and they want to diversify. What is wrong with that? 138312 will stop that. Okay, so it's really a dramatic development. Never saw this coming. Our industry was blindsided. We knew there was a strong potential for a cap. We did not ever see these provisions making it into any type of Ways and Means bill, even proposed. So we've gotten tons of feedback, obviously super supportive from all of you. I was interviewed a couple articles by Market Watch. I've been interviewed by tax analysts on this stuff. Our whole industry is united. We've gotten great support from various investment industries, private placement industries. So anyone that understands the value of options for Americans, investment options, are obviously super discouraged by 13831 and 1383114 and 1383112. But I wish I saw more frustration on these Roth provisions, because they're going to impact all of us, right? Getting rid of the mega backdoor 401k, getting rid of the backdoor Roth IRA is super, super negative. And again, I can give you, multiple adjectives, but it just doesn't make a lot of sense from a revenue raise standpoint. It's going to raise, they said, about 700 million, not billion, 700 million over 10 years, not 1 year, 10 years. And all that's come in the last 2 years. Again, that's those numbers. I think it's going to have a negative decreasing impact on tax revenues because you're going to have more people do pre-tax contributions, obviously because they can't do Roth. So they're still going to want to put money in a retirement account. They're just going to do it on a pre-tax basis, which will reduce their tax liability, which means less money for the government. Okay, I got a couple more questions. Does the income test, generally, at what rate are you taxed if you convert 400K of a regular 401K to Roth? So that money is added to your income, right? So let's say you made 300, now you have 700K of income. You're going to be in the highest bracket, which is now about 37%, give or take, plus state income tax. So that's kind of where you're at. Mike, you mentioned the backdoor Roth solo 401K will be eliminated. Isn't that the only way to contribute to Roth solo 401K? No, you can still do employee deferrals of $19,500 or $26,000 if you're over 50. The employee deferral category will still be available. You're just not going to be able to do the backdoor mega where you can put away up to 58 or 64.5 if you're over 50. That is the particular provision which will stop after tax to Roth. You can still do Roth irrespective of income thresholds in a solo, but you're capped at 19.5 or 26. And then for the profit sharing, you were always able to do the conversion of pre-tax to Roth, but now seemingly you'll be capped at the income threshold of 450 if you're married, filed jointly. So these changes, again, will have dramatic impacts on all of us, and not just obviously the millionaires or billionaires out there, Americans. Love your clip. Going to reach out to via email shortly. Thank you. I appreciate it. So the $19,500 is dollar for dollar earnings, right, Mike? Yeah, the 19.5 is dollar for dollar. You're capped at that, or 26,000 if you're over 50. Whereas the mega backdoor, you were able to go higher to 58 or 64.5, right? So that was an amazing mechanism for Roth lovers who wanted to put away more money in a Roth. Were able to do so, and now that provision will, or that option, I should say, will be eliminated. Again, I don't see the reason. It's not helping rich people. They're super rich aren't doing mega backdoor Roth 401k. They don't care about 40 or 50K. This is helping small business owners. Small business owners are the ones that set up solo 401ks, not Jeff Bezos, not Peter Thiel, right? They work at large corporations, large venture capital firms, large private equity firms, large hedge funds. They're not able to set up a solo K. Okay, so this provision is hurting you, hurting me, small business owners, the sole practitioner lawyer, the small accounting firm, the consultant, the software engineer, the architect, the math tutor. It's hurting us. Someone who's selling stuff online. That's just the negative side of this that I don't think the members of Congress that wrote this understand, that it's so damaging to everyday Americans that really want to work hard, have been taught from day one to save, want to use a retirement plan, want to use the solo 401k, and want to put away money in a Roth because they want to have tax-free growth. That's the whole impetus of the creation of the Roth in 1997. It was to encourage certain people that didn't want to do pre-tax to do Roth, okay? The abuse is not there. If there was this widespread abuse, you would see hundreds of thousands of Americans with more than $5 million in a Roth IRA. You're not. There's less than 30,000 of Americans with $5 million or more in all IRAs, not just Roths, but SEPs, simples, traditionals, and Roths. So the abuse is not there. The Peter Thiel example has been taken to an extreme, and now we're kind of all feeling it on steroids, where our lives will be changed. The way we save for retirement will be changed and modified based off this Peter Thiel story from ProPublica, and it's too bad. Again, I'm not here defending Peter Thiel, whether you like him or not, his political contributions and his political beliefs. That's not the issue. The issue is he was able to generate a lot of money in his Roth, and he did it following the rules. And that's just not what's happening. Right? That's one person. right? I'll give you an example. I was talking to someone, a basketball lover. So do you know that the NBA, which I'm a big basketball person, even though I'm holding a baseball, I love sports. So the NBA banned slam dunks, right? When Bill Russell, Will Chamberlain, Kareem Abdul-Jabbar, they said no more slam dunks because we're worried that only a couple people can do slam dunks and we're going to ban it. So they basically said, because of one or two people, we're going to stop everyone else from benefiting. So what do? They realized that rule made no sense, and they retracted it some years later. So it actually helped, because what did Kareem Abdul-Jabbar? He worked on his hook shot, and it made him one of the greatest scorers in the history of the NBA. So it's kind of the same thing. They're taking Peter Thiel and the abuse and saying, hey, we're going to change the rules for everyone. And they're going to wake up in a couple of years. I hope, God forbid, this provision gets in. Trust me, it will get retracted within a few years, and it will also create different ways for people to save. Just like Kareem developed his hook shot, you and I are going to figure out different ways to save and find ways to, as an entrepreneur, to use our money to generate returns. That's just the way it works. It's the way it always will work. So it's not doomsday scenario. It's not good. We need to educate our members of Congress and our senators about the danger and damages these provisions 138-311, 138-312, 138-314 can have on all of us. I'll do a couple more questions, and I think we'll wrap it up. But appreciate. I know it's in the middle of the day. Appreciate you guys listening, watching. I know it's not the coolest topic. It's probably more enjoyable to listen to videos on how to perfect your golf shot, or how to cook an amazing pasta primavera. But hey, this is important, and there's solutions out there. We have until 12/31 to do conversions, okay, irrespective of income value. We have until 12/31 to do mega backdoor Roth 401k. If you have a solo K, think about it. If you don't have a solo K and you're self-employed, get one. You can dump up to 58K or 64.5 in a solo K. This could be your last chance, okay? Same with the mega backdoor Roth IRAs, 6 or 7K. I know it's only 6 or 7K, but this may be your last chance to do it. And then conversions, if you make more than 4 or 450, and you can expect to have that type of income level for the foreseeable future, this may be your last chance to do some conversions of cash or assets that you think will appreciate in the future. So it's not too late. There's some really interesting estate planning opportunities as well. I suggest, if you have an estate that you believe will be worth more than $5 million in the coming years, 10 million if you're married, filed jointly, talk to an estate lawyer. The unified credit of 11.7 million is going to drop to 5 million per person. There are still some really interesting opportunities. The grantor trust rules, allowing you to put depreciated assets that will appreciate into a grantor trust and escape estate tax, are in jeopardy. And if you don't do it in 2021, you may not be able to do it where you'll be able to leave appreciated assets to your family, kids, without estate tax. So you have a couple months. This is kind of a wake-up call to all of us. Roth conversions, mega backdoors, estate planning. There's time. There's some really good opportunities and solutions out there. So take advantage of them. And that's what I plan on doing for the foreseeable, I guess, the next couple months, is talk about what we can do today, to essentially do our utmost to protect ourselves if these rules become law in 2022. What can we do in 2021 to maximize our current benefits in light of these potential rules? Okay, a couple more. Can you finance mortgage and real estate transactions with a self-directed IRA? Yes, has to be a non-recourse loan, Tim. Can simple IRA be converted to solo Roth 401k end of year if this passes? Yes, if you have less than the 450, married, filed jointly, you will be able to do the Roth conversions anytime you want. You can always roll the simple to the 401k. The simple needs to be open at least 2 years to be able to roll it to a 401k or out of the simple IRA. So just keep that in mind. But again, the conversions are based off the income. Backdoor IRA backdoor IRAs, backdoor 401ks will be eliminated, irrespective of income. The conversions will have an income. A couple more. If you have a rental property in an IRA and do a Roth conversion, is all income generated from rents from now until 59 and a half tax free. Yeah. So let's say you have an asset worth 250, you pay tax on the 250. Once you convert, it's in a Roth. So all the income will be tax free. Just don't pull it out before 59 and a half, because then it could be subject to tax and a 10% penalty. But if you can wait till 59 and a half and the Roth's been open at least 5 years, then you will be able to circumvent tax. But again, if you have more than 450 and you expect to have more than 450 in the coming years, do the conversion today. If you think you'll be under the 450, marry, file jointly for the foreseeable future, you got time, Neil. If you obtain stock under favorable conditions due to being an accredited investor, but that deal is no longer active, but you still have the stock, well, you have to sell the stock after 2 years. Well, you'll have to dispose of it. Either you take a distribution, you sell it, you sell it to a non-disqualified person. There'll be options, right? You can potentially get into a 401k, right? That's what's going to happen. People are going to set up 401ks and basically roll it into the 401k. So again, there'll be options. The only issue is if you have a Roth IRA, Roth IRAs technically cannot roll into Roth 401ks. That rule is supposedly part of a Secure Act 2.0 that they're hopefully going to implement at some point. But now with this budget reconciliation and this whole process, I don't know when Secure Act 2.0 will come back. I'm not sure the Ways and Means Committee is going to pick it up this year. But eventually, you will be able to convert Roth IRAs to Roth 401ks. So you should have a workaround there, assuming you are eligible to get into a solo K. If you're having a low income year relative to others due to COVID, does it make sense to do conversions this year? Yeah. I mean, obviously, if you have NOLs, low income, and again, Neil, it's all about your belief in the asset. Cash, yeah. But let's say you have Bitcoin or another asset that you feel is undervalued today that you feel will appreciate in the future, then yeah, conversions can make a lot of sense. The risk on conversions, and this is something, the last point I'll make before we go. The one thing is Congress isn't keeping this in mind is that conversions don't always work out, right? Remember Lehman Brothers? Remember Bear Stearns? Remember Enron? How many of those shareholders that did conversions a year or 2 years before those stocks tanked are kicking themselves in the foot right now, right? Because they pay tax at a high value and the stock became worthless. So what happened? IRS won because they got tax revenues at a high value, taxpayer lost. So conversions don't always work out. There's not always these undervalued founder stocks that are getting dumped into Roth IRAs, helping the uber rich, drive their Ferraris and fly their private jets. Like, that's not happening. And I keep harping on this, like these facts, but I'm all about facts. Why did I become a tax lawyer? Because I wanted to look at legislation. I wanted to look at the code and see things in black and white. I didn't have to deal with a lot of different legislation / case law. I wanted to see things in black and white. Well, facts are black and white. Black and white is this. Less than 500 people have more than 25 million. Less than 28,000 have more than 5 million in IRAs in total. Okay, so the widespread abuse is not there. They can say it exists. It doesn't exist. It's not there. Okay. Again, industry, 99% of our clients have under $1 million. Average account of our industry is about 125 grand. Those are not Jeff Bezos. Those are not Warren Buffett's. Those are not Elon Musk. Those are us, you and me, people that have worked hard, saved hard, successful, and want to invest and want to diversify. And unfortunately, they want to take that away. They want to de-incentivize us from doing conversions, from doing mega backdoors, from adding just a little bit more in a Roth IRA. Will the 6,000 or 7,000 on a backdoor really hurt the government? It's after-tax money. It's not like it's going to generate tax revenue. Do you think that $6,000 is going to turn you and me into a billionaire? No, right? It's just de-incentivizing us to save. It's just saying, hey, more roadblocks in your way, less incentive to save. So what are people going to do, right? I talked to a bunch of clients in the last few days. I said, you know what, Adam, I love you, but maybe I'm just going to buy real estate. I'll forget about saving. I'll take money out of my IRA 401k. Instead of putting 15 grand in my 401k, I'm going to keep it in a personal account. I'm going to buy real estate because this way the government can't take it from me, right? If I have a hard asset, they can't take my house. They can't take my apartment on the beach that I'm renting out on an Airbnb. They can't take my foreign real estate. And that's what's happening. There's a lack of trust in the government. A lot of people feel that the government and members of Congress now are just looking for anyone's money to pay for these infrastructure, to pay for these social programs. And nothing is safe. Nothing is secure, right? Our retirement accounts, which we're always been told have been precious, are under attack. Like, it's crazy, right? If you made an accredited investor investment, they want you to get rid of it in 2 years or not get rid of it, right? What's next? Are they just going to say, give it to us? Are we just going to say, you know what? If you have gold in your IRA, like, just give us the gold. We're taking it. Or if you have Bitcoin in your IRA, like, sucks. We're just going to take it away from you. I don't know. I hope not. But I have lost a little bit of faith in government. And again, it's not political. It's not, no side is perfect. The left is bad actors. The right are bad actors. I mean, let's get in the middle again. Let's get to what made America great in focusing on freedom, focusing on letting people build businesses, investing in our great American businesses, right? Why are we the greatest economy in the world? Because we have the greatest companies in the world. That's why we'll always have a leg up on China, right? China will steal our technology, but they'll never create the next great company. Why? Because they're not free. Their government makes it hard to create businesses. We encourage business. I saw recently the SEC just proposed or just added some clarity and said, hey, we want to encourage people to invest in startups. We want to encourage people to invest through crowdfunding and private placements in small businesses, in growing businesses. And that is vital to preserving America and preserving the strength of American businesses, because we have to compete not just with ourselves domestically. We have to compete with Europe. We have to compete with China. We have to compete with countries all over the world. And if that $12 trillion of IRA money is no longer available to fund these next great startups, what happens, right? The Chinese have unlimited money. The government will fund the necessary businesses. Our government doesn't do that. We have a private system. We are not funded by government, right? The next Facebook is not getting government grants of $100 million. The money comes from us. You can say what you want about Peter Thiel. He made his money not as a founder stock of PayPal. He made his money as the first investor in Facebook. He put in 500 grand. Maybe if he didn't put that money in, maybe no one else would have. And maybe Facebook would never have become the business it is today, where it employs 30, 40,000 people and pays hundreds of millions of dollars in taxation. So it takes money to generate and grow businesses. And by removing $12 trillion off the table, that's going to have a significant impact on the ability of the next great American business to prosper. So that's it. So is a self-directed Roth IRA still a good idea? Yeah, obviously, like smart people, self-direct, like, yeah, doing alternative assets still makes sense. There's going to be workarounds. You will still be able to get done what you need to get done. If they stop accredited investors, they will private placement accredited investor investments. Guess what? There'll be different investments like Reg A pluses, crowdfunding, different ways to raise money. Entrepreneurs will always find a way to grow their business, always follow the money. And that's what Congress is losing, is they can create all these rules. Guess what? Money will always follow money, and that's just the way it's going to work. There will always be opportunities, and money will follow those opportunities. So these rules will not stop anything. Yeah, we'll be capped at the 10 million, but who cares? Like, no one really cares to have 100 million in their IRA. I think we'd all be happy with 10 million. Am I for a cap? No. Just like I'm not for, capping someone's wealth or telling you how many homes you can buy or, how many dogs. I got 6 dogs. Like, is the government going to say, hey, that's too many dogs? Like, I don't know. Maybe. But I'm a dog lover. I love dogs. Like, what's going on? So 10 million is a lot of money, but just because someone earned it, like, it's going to be subject to a state tax. Why do we care? But anyways, that's done. That's water on the bridge. Like, we're fine. We're going to deal with the cap. We'll live with it. But all these other provisions, 138311, 138312, 138314, please reach out to your members of Congress, your senators. These will have a dramatic impact on businesses, on business owners like you and me, not the uber rich, just everyday Americans that want to build a business, hire more people, save for retirement, have a great life, take our families on vacation, have money for our kids so we can pay for education and leave a legacy through our families. So that's the goal. I'm confident we will educate enough members of government to get these provisions removed, but definitely could use your help. And every voice matters, and we are only as strong as the group and strength in numbers. So anything you guys can do, please do. So there you go. I really appreciate your spending some time with me the last hour. It's been a lot of fun. Again, you can always reach out, IRA Financial. You can reach us on Facebook, Instagram, Twitter, YouTube. Subscribe to our YouTube channel. We drop 5 videos, 3 podcasts. I generally do a live, trying to do one every week. So you're going to get some really good content. I'm happy to communicate with you guys directly, use some of my tax knowledge as a tax lawyer for the last 20 years and 12 years of self-directed retirement tax experience. Anything I can do, whether you're a client of mine or not, I don't care. I will never turn down a email or phone call or message from anyone. This is my passion. This is what I love. I believe in the retirement system. I believe it can bridge the wealth gap. I believe it can work for all Americans. And unfortunately, it's under attack. So we need to stand up together and defend it for all Americans and educate people about the power of the retirement system and how much good it can do. It just needs to be left alone. So please focus on other stuff. You want to raise corporate tax or capital gains, whatever. Okay, we got to pay a little bit more tax. Am I in favor of that? No, but collectively, okay, we'll do it together. But the retirement system is not even raising any money. They believe in totality, all the retirement provisions will raise just $4.7 billion over 10 years. $4.7 billion. That includes everything. The provisions I'm talking about, the cap will raise about $1.7 billion. The 10% to officer will raise only $42 million over 10 years. The Roth limits, they say, will raise about $750 million over 10 years. Okay. And the accredited investor, they claim, will raise about $1.7 billion over 10 years, which, again, I don't agree with. I'm not sure how it'll raise money when you're not allowing people to do accredited investors. They're just going to do equity or real estate. So how's that raising money? But in any event, it's not a lot of money. So why are we doing this? We trying to punish Peter Thiel? Okay, we got a cap. That's going to stop anyone from coming to the next Peter Thiel. We're fine with that. Do the cap. You want to give more money to the IRS, give it to them. By the way, the last thing I'm going to end with, this is actually very interesting. So they claim, I should have started with this. They claim that there's so much abuse, right? This is the whole point. Rich people are abusing the system. We have to stop it. So listen to this. They want to increase the budget, right, for IRS, right? So they want to increase the statute of limitation from 3 to 6 years. Their hope is that, hey, if we have more time to audit, because instead of auditing you over 3, we're going to audit you over 6 years, we should collect a lot more money, right? Because there's so much abuse. Guess how much they believe this is going to collect over 10 years? You're going to die. $8 million over 10 years. They said it's going to lose $22 million next year, but it's going to raise $1 million a year. Okay. So you're saying if I have 6 years to audit all you abusive people out there, all you uber rich people that are abusing the retirement system. But so I have 3 extra years. So I'm going to get all you guys. You guys are gone. But I'm only going to raise $8 million, $1 million a year. Is there that much abuse? So they're saying, we know there's no abuse out there. Clearly, because if they thought there was abuse, that number wouldn't be 8 million, right? It'd be $1 billion, because there'd be so much money that they can capture because everyone's doing prohibited transactions. Everyone's abusing the system. But no, that's not the case. They're only going to raise 8 million over 10 years. So it's obviously not about raising money. It's about a policy play to attack rich people. But they're not just attacking the uber rich. They're attacking you and me who are not uber rich. We're just trying to make a living. I got 80 employees. I make less than I did 20 years ago as an attorney. Not 20, but 15 years ago. So I don't take a big salary. Everything I make, I dump back into the business. So, and if you're a business owner, it's not like you're walking away with $2 million and pulling money out of your business. Like, you're working for your team. At the end of the day, you hope to sell your business down the road for a lot of money, but day to day, like, it's a struggle. So stopping these businesses from raising money is crazy. Stopping business owners from putting more money in the retirement system is crazy. And they've admitted, yeah, on paper, we'll say that there's all this abuse there. But if there was so much abuse, wouldn't you think they'd raise more than $8 million if they had an extra 3 years to audit people and they have an extra $80 billion to audit people? Literally, there's no abuse, right? $8 million over 10 years. That's all I have to say. So thank you guys for watching. Sorry, I kind of went on a tangent, but this thing is just, I'm having trouble sleeping. It's been really hurtful for me because I just never thought that the system would be under attack. I again just thought the Dems and Republicans, like, they all understood that this works, and I always had faith in the political system because I'm like, at the end of the day, like, they can fight over politics, but they understand what's important. And unfortunately, they're losing track of that, and they're losing light of what's important to all of us, our constituents. So that's why it's our job to educate them and let them know that, hey, these provisions make no sense. They're impractical, illogical, and they actually hurt us. And we're not uber rich. We're regular folks that work hard every day, that want to provide for our families. And that's it. So thank you for listening. Thanks for watching. Reach out with questions. Check out my 3 podcasts. Ask Adam. He's live. Adam Talks. Ad Mail and Ad Bits. And then obviously subscribe and check out my videos. So there you go. Thanks again. Stay strong, and talk to everyone again next week.